Hi guys, Darren and Sean again. This time we're going to be talking about the loan packages that are available from both the federal and state governments. They're two very different packages with different repayment terms. During these tough times, it's important that we all know where we can go and access capital to help our businesses survive and progress through this crisis. So Sean, do you want to just talk us through briefly what both packages are?
So the Queensland Government Loan Program, which is known as the Queensland Government COVID-19 Job Support Loan, is administered by an organisation known as the Queensland Rural Infrastructure Development Authority, or QRIDA. A lot of people haven't heard about QRIDA. They're the state government authority that administers disaster relief payments for flood, drought and bushfire. So they're the authority the government has decided is the best to deal with payments in this emergency we're in at the moment. The state government loan scheme, which so far the state government's committed $500 million to, is going to be a great package for those who can access it. Loan amounts are up to $250,000, however are capped at 50% of your average payroll over the last 2 years. So that means to get access to a loan of $250,000, you need to have had average wages over the past 2 years of $500,000. The loan term is 10 years. The prevailing interest rate is 2.5%, and the loan is structured so that we have 12 months of interest-free, 2 years interest only, and the remaining 7 years principal interest to repay the loan. For most businesses, those loan terms are going to be far more favourable than any commercial loan by a long, long way. It's important to note that the state government loan is not for refinancing existing debt, and it's not for asset acquisition. It is just to help businesses keep operating, keep the doors open, keep paying wages and other operating costs during this period where they're impacted by the coronavirus crisis.
And the federal government program?
So the federal government program is a bit different. So the federal government have given money to commercial banks at discounted interest rates under the proviso that they lend that money out to impacted businesses. So rather than being administered by a government organisation, the federal government loans are going to be administered by commercial banks. So not just the big four, but all commercial banks. The federal government program is available for small business entities with turnover of $50 million or less, and the loan terms are going to vary depending on the bank and depending on the customer. So some indicative loan terms we've seen are a total term of 3 years, and I think the 3-year term actually is a government requirement. 6 months of no repayments, however interest capitalising, and then the balance of the term to repay or refinance the loan. We've seen indicative interest rates of anywhere between 4 and 8%, which are a lot higher than the Queensland government loan we spoke about, however also significantly cheaper than a lot of finance that businesses can access in these situations. And the loans are advertised as being unsecured. We'll talk about that a little bit more. I think security, whilst both programs are advertised as being unsecured, I think businesses, if they do access this funding, need to look at the fine print and understand exactly what they're committing to.
Yeah, I've been told that the government will guarantee half of the loan, and that the directors have to guarantee the other half. Is that what you're seeing?
Yeah. So look, talking about security and just looking at this federal government program initially. So correct, our understanding is that the federal government is guaranteeing half of the loan. The loans are unsecured, which means you don't need to put up real property security for the loans. However, banks are typically looking for other forms of security, and early indications are that a lot of banks, for many businesses, are going to look for director guarantees. I think all directors, when we're operating in a time of crisis and significantly disrupted business, whilst everyone wants to keep their business going and wants to access capital where they can, everyone needs to get professional advice and think long and hard about accepting finance with director guarantees when the future is so uncertain.
And I think it would be fair to say that both loans will need full applications, and they will need some form of cash flow supporting documents to help evidence that they can repay these loans at some time. These aren't free kicks like the other ones are, where you apply and get money. These are actual loans that you have to have a thought that you're going to repay this under the payment terms.
Yeah, so correct. So they're definitely not a grant. They are repayable. For the Queensland State Government loan, the QRIDA website, if people refer to that, QRIDA, just Google that and you'll find that website quite easily. There's a list of requirements there, and that needs financial statements, details of businesses and shareholder financial positions. So the application process there is quite structured. For the federal government backed loans administered by the banks, again, the details required are going to vary depending on banks and depending on businesses.
Yeah.
But there is a formal application process. Finance information does need to be provided, and particularly for the banks, they're understanding the cash flow position of the business is very important. And again, going back to the security position and whether you're a business owner, sole trader, director, anytime you take on debt, you need to have a very clear idea about what your repayment plan is. Just because you can access the finance doesn't mean that it's the right thing to do for your business.
Thanks, Sean. So guys, just in summary, there are two loans available, one by the state government, one by the federal government. They both are loans, so they are not grants. Their terms are very generous, but it will be a process to apply for each of those, and you will need to go and see your accountant or trusted business advisor to help you go through that process and work out, do you need the money, how much you might need, which program would better suit your individual needs, and can you repay this?